Welcome to the next episode of KapVista Klips. We're here with Brett from Aura Credit, and this is part of our Meet the Manager series. Hey, Brett, how are you?
Well, thanks, Daniel. How you going, mate?
Good, good. Early start to 2024, but positive things are already on the horizons. It's been really good so far, and we're only 17 days into the month.
Yeah, exactly. Looking forward to a big 24.
Yeah, yeah. So we really want to get an insight into you and what Aura Credit is doing. So why don't we start with, who you are? Tell us about your story. How did you get to this point? What's your experiences, your education? What do you bring to the table as a fund manager?
Yeah. So look, I mean, I think going way back, I come from a family that was in business in an SME. I worked in that business, as a kid, and then as I got through school and uni, and understand how businesses operate, the needs of SMEs in the Aussie market, just through that experience as a kid. Then. Going through education, trained as a chartered accountant, worked in a small accounting firm in Australia servicing SMEs. From that point, ended up moving into Macquarie Bank, which is Australia's largest investment bank. Whilst at Macquarie, I was there for 11 years and really focused on providing debt capital. So initially, worked in the metals and energy capital business in the finance team there. That business focused on providing debt capital to miners, and then also forward hedging on their interest rates, their FX, their commodity exposures. After that, I moved into the debt markets division, and that division really focused on providing and raising capital for lending entities. So we operated in the securitization market primarily. We assisted lending businesses in tapping capital markets there, and we also provided a lot of warehouse financing on Macquarie's balance sheet. So operated in that business, and whilst I was there, really had a focus on tech-enabled lenders in the Aussie market. We were seeing an increasing use of technology to assess borrowers, to collect information on the borrowers and assess those borrowers from a credit risk perspective. That was a primary focus for me. And whilst there, we looked across the consumer spectrum and also the business lending spectrum. My personal view was that the business lending environment and market was a better place to act. I think you can get a great risk-adjusted return in that market. You've got multiple points of recourse on your lens, and you can do higher volume loans in that market with some more spread. So ended up leaving Macquarie after 11 years to join Aura and build out the private credit business there. So we kicked that off back in 2016. We've been building that from 2016. We launched the Aura High Yield SME Fund in 2017, which was, I suppose the primary fund that we got out there. We've been managing that strategy since 2017. We've had 100% positive months, even going through that COVID period and a technical recession in Australia. We've taken on a number of mandates, and we've also launched a retail fund in Australia. So the business has built out relatively significantly in the sort of 7+ years since we kicked it off at Aura. And we're really looking to sort of capitalize on that stable base that we've created over that 7-year period, and obviously the learnings that we've developed over that 7-year period.
Yeah, yeah. So Aura has a really strong history over the last 7 years with a successful track record to show the investors in the market, both domestically and internationally. The focus, you've taken that focus of your last 10+ years experience into Aura. So you're taking that focus and that strategy and that experience. What do you think sets you apart from the other players in the market?
Yeah, so I mean, like my personal experience. So we're looking at over 18 years experience in the lending market, and more than that in servicing businesses. We've built out a strong team with strong debt markets credentials as well. So we've got a good team around us. We've got a lot of IP on the market. So we've spent a lot of time assessing lenders in the market. So the way we look to gain access to private credit in Australia is via warehouse financing. So we're funding lending entities.
Mm,
Now, as a group, we've screened over 90 lenders in the Australian market. We've funded 8 in total. So we're very selective on who we go in and provide capital to. Um, so that IP that we've generated, uh, you know, if you look at my experience in the market over an 18-year period, is extensive. And our track record that we've developed by selecting the right lenders is really what sets us apart. I think there's a number of ways you can gain access to private credit. You can go into direct lending. You can look at property-backed exposures that are, development focused, obviously sponsor-backed loans in the private equity space. There's a number of, or even infrastructure. So there's a number of ways you can gain access to private credit in the Australian market. What we're really focused on is the business lending market in Australia. That's our real focus there, and I suppose that's what sets us apart. We are a business focused manager that looks to gain exposure via warehousing transactions. So we do have that alignment of interest with the lenders, and that's something that I really gleaned from my experience at Macquarie. Having the alignment of interest with a lender is where they've got their capital at risk before our investor capital is a great credit enhancement. So that's something we focus on and a bit of a point of differentiation.
yeah, that probably works well, and gives your investors peace of mind that you are very selective and you have that aligned focus with your lenders, and having that, being selective and going through the process with, you said, over 90 different lenders and only choosing 8. That would give, the due diligence process there would give any investors looking to come on board with Aura Capital, or a credit, a really good, peace of mind that you're gonna look after their capital and focus on growth. So where is the company headed? Where do you see the next? So what do you see for 2024 and beyond?
Yeah, look, as a manager, we've spent a lot of time building out our base and building out our systems, our teams, our capability, and we're really set to accelerate. So, from our perspective, we've got a number of strategies which are providing strong revenue flows for us as a management team. Which has set a stable base for the business. So we're a strong, profitable management co. We've got a good base of lenders that we're working with that we can build on. So that is a significant positive, and we've got a number of strong deals in the pipeline. So from our perspective, we've set an excellent base, and our internal targets are to hit sort of 100% year-on-year growth within our funds management business. That's where we're pushing. And look, I think we've got the capabilities to work with larger investors as well, where we can, from our perspective, we're very commercial in the way we operate. If there are larger investors out there looking for specific mandates, we can work on in that manner. We are currently doing that. So there's a number of ways we can provide solutions to investors in the market.
Okay, perfect. And what sort of milestones you achieved, and what recognition have you had, for the Aura business?
Yeah, I mean, I think what's been really satisfying from a business, and our team are really happy with the way this has panned out. We've had a number of points where we've been recognised as the top performing private credit fund in APAC. So we've done that on both Preqin and hedge fund intelligence with intelligence data as well. So In 2023, we were the top performing private credit fund in APEC, which were APAC on the with intelligence data. So that was excellent. I think the other piece on Preqin data in the first half of 2020, when we were really at a peak panic point with COVID starting and shutdowns beginning. Our fund was in the top 3 performing funds in APAC in that time frame. So, yeah, as a manager, we're very much focused on capital preservation. Whenever we go into a transaction, our primary objective is to preserve capital, followed by that strong risk-adjusted return. So, we've seen over those times where the markets are volatile, the way we've selected our assets and structured our assets has led to sort of very stable performance. And look, in benign markets, when you throw leverage into funds, that will exceed the returns that we're providing, and we have no problem with that. But in our view, you're taking private credit as a bit of a defensive component of your portfolio. And in our view, our core objective is capital preservation for our investor base. So I think those timeframes where we've had volatility and we've been able to get that industry recognition is something the team's really proud of.
Yeah, that's awesome. That's awesome. So thinking about the fund, and you're looking to bring on new capital. What's the offer? What sort of investors are you looking for, and what was the returns for last year? Or what can investors expect?
Yeah, so we are looking at bringing in new capital. We've got the Aura High Yield SME Fund. It's an Australian fund wholesale offering. That's been running for 6.5 years now. As I noted at the start, that strategy's had a stable NAV throughout its life. So we've maintained a $1 unit price. We pay monthly distributions to investors. The sort of bookends on our monthly distributions have been between 60 basis points and 92 basis points. So sort of that low end of distributions, and this is net of fees and expenses, has been 60 basis points for the month, up to that 92, 93 basis points. And where we've been returning, it's been since inception 9.62%. Annualized returns just moved through that at the moment, so we're returning about 9.67% at right now. So from our perspective, we're really targeting that high single digit, low double digit return to investors. Do not expect us to hit those 15% returns. That's not what we're looking to do. Where we will look at putting more credit enhancement below us rather than taking that excess yield, because from our point of view, when you start getting paid those high yields, the risk is really amplified in the book. So we're looking at that high single digit, low double digit return area.
Yeah. So, even with your credit preservation focused or capital preservation focused, and making sure that you're picking the right investors, you're still producing really good returns, solid returns. So, anybody's looking to build their portfolio, there's a really good option here that they can get in touch with. So I won't take up too much more of your time. I appreciate you jumping on. I like the fact that you are offering something different. You're coming from a wealth of experience, and you're really focused on that capital preservation, but still producing really good returns. So I'll put the details for Brett and his fund below. Anybody who wants to get in touch after watching this, please reach out to me and I can make a direct introduction. But thank you for your time. I really appreciate it. And I look forward to hearing more about what you're doing.
Thanks. Appreciate your time, Daniel.
No problem. Bye.